Welcome back, and joining us now is Sabyasachi Ray. He's Executive Director, Gem and Jewellery Export Promotion Council. Mr. Ray, hi, thank you so much for joining us. And yes, there is a lot to talk about, but I want to get to the gold prices first. And how is the industry looking at that? Because a new day and a new all-time high is how we seem to be living and dealing with it right now.
Yes, Manisha, I think it is tough time for the industry. After a very good run, after the duty went down, as you all know, industry had a very good time. In the retail segment, the sale was good, all was going well, but suddenly this price increase and volatility, as we have told last week also, that the volatility is disturbing and also the prices are going up. Why the prices are going up, all of us know. Of course, there's huge demand from different countries. That means the countries are lapping up gold. And the second thing we all know that Europe has now decreased the interest rate. It's the big news. And for gold, the price will go up because what we understand that US is the next. Now, if the US comes out with a, let's say, 0.25% decrease, then it may be $50 to $60, and it is 0.5% decrease, then the market will go berserk.
Okay, that is the kind of calculation that the industry is doing right now. Also, Mr. Ray, how is it for the export as a number right now? I mean, we do understand that the last financial year wasn't so great. So was the case with last quarter as well. But now with the gold prices where they are, I mean, I'll of course wait for the GJEPC data. But from where you see on a day-to-day basis, is exports picking up?
See, one of the things what we have seen is that, as we have told, the diamond prices are stabilizing. So the that fall in diamond exports have decreased, what we have seen. And also what we are seeing, but of course for gold, it is not good news because the gold exports are the first time for the long, I think for the past 6-7 months, it has gone down. So it has gone down because of this price increase, because the demand, of course, people are waiting and the purchase is low. Because of that, the plain gold jewelry exports have gone down. However, in studded jewelry and etc., we are maintaining the levels, whatever is there. There is no decrease and then increase, but still the Chinese, data is not helping us. What we understand is that the Chinese markets and the Chinese economy and the data, whatever is coming out, is not that encouraging.
So tough times, but there have been some good news on the horizon as well. And the recent meeting that was held in Bombay, and you were all part of it as well, the Board of Trade, that is, the government has now extended incentives to various other sectors. What is it that the gems and jewelry is taken away from this meeting, and how does it work for you?
See, Manisha, for a long time, we are, working with the government for e-commerce exports. What is the e-commerce exports is that, when we talk about B2B exports, you understand that business to business means the wholesale price. And when you talk about retail exports, is the retail price. Between wholesale and retail price, there's a difference. So e-commerce, if you export through e-commerce, you get the export figure in retail. So what do we understand in the world, as it has been assessed, that there is a demand of $45.33 billion of e-commerce jewelry which is required in the market, and India was nowhere into that because of its policies and etc. Because of that, we are working with the government so that two things we are working. One is ease of doing business. You come out with procedures where the e-commerce exports are made easier. Second thing is that it has to happen through the couriers. It has to be given the similar kind of facilities like other products are there. That means risk-based checking at the point of exports. And the third thing, what we are calling is that, the benefits, because you do not export the rates and duties and taxes of India in exports. Any country, they do not do it. So we are talking about the benefits when you are doing exports, the duty-free benefits for those export raw materials. That was what we are demanding. So the first thing, the ease of doing business. In the recent times, you have seen that jewelry has been taken as a category which is permitted for e-commerce export. The second thing they have done is a risk-based assessment at the point of exports. And third thing, which is a very welcome announcement, is that they have, not for gems and jewelry, for all other sectors, they have now announced that all the benefits at the export level in terms of duty drawback, in terms of rod tape, in terms of ROSDTL, all these things will be given to the exporters, which is a very, very big news for us.
Oh, absolutely.
Mr. Ray, just a question on the industry. As of the data that you have, if you could give us a sense of what is the inventory that, the organized part of the industry is sitting on, and how much of that is unhedged?
See, I can tell you that. See, one thing is that on the diamond inventory, it is never hedged, of course, because we import the raw materials, and from raw materials we, cut and polish the diamonds. And in most of the cases, between the rough diamond and the polished diamond prices, there is a lag in the price, increase and decrease and etc. So right now the lag has decreased, but still there is a lag. So that is not that is totally unhedged. I can tell you that. However, in the gold, all the big firms, whenever I do not want to name them, all big exporters are hedging their, gold forward cover. But in a sense, when you export something, the hedging happens to the sense that the bill, if you have, processed the rough diamond, the raw materials to cut and polish diamonds, and then you have exported it, and the value of the dollars, whatever is there, that is hedged. So in the end of the day, of course, the price hedging is not there, but dollar hedging is there. But in terms of gold also, whenever you are exporting, the export value, whatever has been quoted in the invoice in dollar terms, that is hedged to a level.
Fair point that. Thank you so much, Mr. Ray, for coming by and answering a whole host of questions. Really appreciate your time. And with that, it's wrap on Halftime Report. Business Lunch will take all the action ahead.